Assalamu alaikum, dear students. Here I am Khazir Sheikh with a lesson for 11th Commerce. Subject is accountancy. The topic today I am going to share with is bookkeeping, accounting, and accountancy. And here in this lesson, we will see the relationship between among the three, that is bookkeeping, accounting, and accountancy. This relationship is shown in the Venn diagram. The outermost circle represents accountancy, the middle one accounting, the inner circle represents bookkeeping. You see here, the bookkeeping is a part of accounting, and both bookkeeping and accounting come under the jurisdiction of accounting. This come under the jurisdiction of accountancy. This relationship among the three is shown by the Venn diagram. So, first of all, we will see what this bookkeeping means. Bookkeeping. What bookkeeping means? It is the primary and basic function of accounting, and it is concerned with the keeping and maintenance of records and the activities which are included in this bookkeeping are listed as follows. Number 1, identification of business transactions from various transactions which have financial character. First, I will explain this. The first activity involved in bookkeeping, and that is, I try to understand it, identification of business transactions from various transactions which have financial character. You see, there are various transactions in the business, and among those transactions we have to choose the transaction of business which involves money. For example, the impact on the sales due to the lack of coordination between the sales team and the production team, that affects the business adversely, but we can't record this effect in the books of accounts. So this transaction cannot be included because it is not financial in character, because we cannot assess the loss and we cannot assess the monetary loss of the transaction. It cannot be shown in the books of accounts. On the other hand, if there is loss by the fire, this transaction involves finance. Finance. This transaction involves money. We can assess the money that is involved due to this loss of fire, and it can be shown in the books of accounts. We can record it. Next example is, if for example we purchase a car for business purpose, and we can show this. This transaction involves money. This transaction involves finance. So we can show it in the books of accounts. On the other hand, transfer of an efficient manager. This is also a transaction, but we cannot record this in the books of accounts because it does not involve finance. So, dear students, first of all, we have to identify those transactions of the business which involves money, which is in financial character. So we have to identify those transactions which involve money. Identification means we have to choose, we have to select those items which involve money. And this is the first activity that is involved in this bookkeeping. The second, measurement of transaction in terms of money. Once we identify the business transaction, then we have to measure it, and the measuring unit for measuring this transaction is currency. That is, we can measure it in terms of money, how much money this transaction involves. We have to measure it. Now the third activity involved in bookkeeping is recording those transactions in the books of original entry. In the books of original entry. Once we have identified the business transactions, we measure them in terms of money, then we have to record these transactions in the books of original entry. The books of original entry are those books in which we record the transactions for the first time. Dear students, these books of original entry, that is journal, cash book, purchases book, sales book, etc. So here under this activity, we record those transactions in the books of original entry. When we record these transactions in the books of original entry, then the fourth activity is involved, that is classification of transactions keeping in view the respective ledger accounts. Classification of transactions keeping in view the respective ledger accounts. So dear students, first of all, you know what classification means. For example, the classification of animals on the basis of their food habits, we can classify those animals which have similar character with regard to food habits. That is herbivores, carnivores, and omnivores. And those animals who eat grass and vegetables, they come under the class of herbivores. And those animals who eat this meat, they come under the class of carnivores. And those who eat both meat and these vegetables and this grass, etc., they come under the category or class of omnivores. Similarly, we make the classification of students in the school. For example, 11th class, take the example of 11th class. Some students are placed in commerce stream, some in art stream, and some in science stream. The commerce students, they are of same, they have same characteristics. They study the same syllabus. They study the same this these uh, they study the same syllabus and same books. And science students, they are similar, they have similar characteristics, they have common curriculum. And the students of arts, they have the same curriculum. So keeping in view the nature, we classify things. Same is the case here in bookkeeping. After we record the transactions in the books of original entry, then we have to classify these transactions. How we will classify these transactions? The transactions having the same nature, which are of similar nature, they are placed under one account. So different transactions which have similar characteristics, which are similar in nature, they are put under different accounts. For that very purpose, we have to prepare ledger accounts. And in ledger accounts, that transactions of same nature are placed. For example, cash transactions. Cash transactions have the similar nature, so all the cash transactions are shown under a particular head, that is cash account. This is what the activities are involved in this all the activities that are involved in this bookkeeping. Now we will see what this accounting means and what are its functions, what are the activities that come under this accounting. Dear students, first of all, I taught you the about bookkeeping, which is basic function, which is primary function. Primary means where we study basic things. You see, just like primary classes, there we give education related basic things. And then comes the secondary stage. And this accounting is the secondary stage. It is the secondary function. This accounting starts where bookkeeping ends. Where the work of bookkeeping ends, then we deal with accounting. It is the secondary stage. And the activities that come under this accounting, or the activities that are involved in accounting process, they are listed as under number 1, that is summarization of the classified transactions in the shape of final accounts. This means whatever we did so far, we recorded them in the books of original entry, then we classified in their respective ledger accounts. Now we have to make the summary of this this in accounting. Summarization, you know when you read a poem in your English, then you are asked to make the to write the summary of the poem. There you what you do, you make the brief description what you studied, what you got through the poem. Similar is the case here also. We summarize the classified transactions, we summarize them, and this summarization can be made in three accounts. That is, one is trading account, second is profit and loss account, and third is balance sheet. Go. So we summarize the all the work of the business of this bookkeeping, and that what we did in this classification in ledger accounts. Now we have to summarize it, and we can summarize it in three accounts, that is trading account, and then is profit and loss account, and balance sheet. We will summarize it. Now the second activity that is involved, that is analysis and interpretation of the results disclosed by the financial accounts. Financial accounts disclose us the results of this accounting process. For example, trading account shows us the gross loss. Then we prepare profit and loss account, which shows us the net profit. Also, this profit and loss account shows the performance of our business enterprise, of our organization, of our company. This profit and loss account shows us the performance of the this business organization, whether we have suffered a loss or we have a gain or we have a profit. And then one more statement is prepared, that is known as balance sheet. This balance sheet shows us what the firm owes and what it owns. What is the strength of our firm, whether where it stands, what is the strong points of our firm. This balance sheet shows us the strong points and weak points of our business organization. It shows us where we stand, and it also tells us about the capital. What happened to our capital? Whether our capital has increased or decreased. So, to cut it short, I will say you that this summarization is done in these three accounts, and they give us some information, they give us some result. When we get this result, next this activity that is involved, that is analysis and interpretation of the results disclosed by the financial accounts. These financial accounts disclose, they tell us some results, and on the basis of these results we have to make the analysis of our firm, of our business organization, regarding its profitability, regarding its liquidity, regarding its solvency. What analysis means? I will simply say you, if we have to make an analysis of a sentence, say he comes daily to school. He comes daily to school. Here we say what he stands for, comes, what it depicts, and daily and school, etc. We make here the analysis. What is what he represents, what it is pronoun, etc. Comes, this is verb, etc. So in case of this, when the results are disclosed by the summarization of the classified accounts through three accounts, that is trading account, profit and loss account, and balance sheet, we make the analysis. We judge the liquidity, we judge the solvency, we judge the current position of our business organization. For example, if we have to say, we have to calculate a current ratio, we know what are our current assets and what are our current liabilities. Suppose current assets are 3 lakh and these current liability 1 lakh, then the ratio is 3:1. And here we can make the judgment. Basically the satisfactory ratio is 2:1, and if this ratio is 2:1, we can say that there is enough in our current assets, so that we can meet our current liabilities, and we are left with some money extra, which we can use in other business operations to keep it in a good position. And if it is 3:1, we can say that there are more funds in current these assets, and they should not be there because the funds are idle here. Had they been invested anywhere, they would have earned. The satisfactory ratio is 2:1. You will come across these things later on. Basically, this is the subject which you are studying for the first time, so you will face certain problems. Inshallah, by delivering next lessons, these things will be also cleared. Now the third, and so by doing this, we can make analysis, we can interpret things, and by analysis and interpreting things, we can draw meaningful conclusions, meaningful results. These results will help us in knowing the position of our business organization and what corrective measures we need to be taken, so that if there is any weak point, we can get it on the right track. Last, third activity that is involved in it, that is communicating the information to all concerned interest parties. This, once we draw the meaningful conclusions, and we can show this result through publishing in journals, in newspapers, etc., so that this information is communicated to those who are interested in this accounting or who are concerned with accounting. For example, banks, they provide us loans. They will see the portion of our business. So there are creditors, there are employees, there are so many other parties that are interested in this information. So in accounting, we first of all draw meaningful conclusions, then we communicate the same information to the concerned parties, and those concerned parties take their decisions on the basis of this information. They can use this information for providing us funds or credit on the basis of our liquidity. If they find that our organization is sound, they can lend us more funds. If they see that it does not do well, then they will restrict these providing these funds, etc. Now we will study what accountancy means. Accountancy is a systematic knowledge and contains rules, regulations, principles, techniques, concepts, which are to be applied in the process of accounting, in the process of accounting. It is a broader term and acts as a guide in the preparation of books of accounts, summarization and communicating the information. So this is accountancy. It is a broader term, and this is a subject like other subjects. You see physics is a subject, you see mathematics is a subject, economics is a subject like other subjects. Accountancy, in physics we see there it has its own principles, laws, etc. And in mathematics it has its own laws, principles, etc. For example, one example principle of this physics is this: everybody continues state, everybody continues in its state of rest or of uniform motion unless it is compelled by some external force to change its position. So similarly in mathematics and in economics there are its own laws and principles on which the subject, on the basis of which subject guides. Similar is the case here with accountancy. This accountancy is also a systematic knowledge which has been gained through the observations and experiments, which has been gained through observations and study, etc. And this is also a subject which has its own systematic knowledge, and it has its own terminology, and it contains rules, regulations, principles, concepts and techniques which are to be applied in the process of accounting.